Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Aiman Hakim bin Muhammad Kamaluddin. My metric number is 108020F1018. Okay, next, I will continue. I would like to tell you about our company is Sahim Clothing, which is I and my two friends, Muhammad Iqbal and Muhammad Shafiq, create this company and sell clothes for students, which is like a school uniform, sports uniform, and other accessories for the student. Okay, now I will explain about the definition of cost accounting. Okay, cost accounting used internally by management in order to make a fully informed business decision, and it's consider all input costs associated with production, including both variable and fixed costs. And then types of cost accounting include standard costing, activity-based costing, lean accounting, and marginal costing.
Okay, my name is Muhammad Iqbal bin Mazin. My metric number is 108020F1022. I want to present about 5 disadvantages for a company which does not apply cost accounting. First, enable to control of material and supplies. If each company enable to control of material and supplies, it will become disorganized. Material form an important part of the cost of a product. Therefore, if the control does not occur properly, the entire manufacturing process will be disrupted or even stopped if the right type of material is not available in the right quantity at the right time. Number 2 is unable to determine product cost. This will give effect for a company primarily in determining how to set the price of the product that's comprised of labor, overhead, material, and any others associated expense, as well as not being able to make strategic plans such as estimating future profit, staff's need, and expansion plans. Number 3 is enable to supply information for short and long run decision. If the company enable to supply information for short and long run decision, the company enable to adjust all costs in the long run, and company are unable to influence price though adjustment made to production levels in the short run. For example, the company could not implement change by increasing or decreasing the scale of production in response to profit or loss. This may entail building a new plans or adding a production line, which is due to of the company unable to supply information for short and long run decision. Okay, number 4 is enable to disclosure of profitable product. It will give effect for company such as the company enable to eliminate the product or service that unprofitable or less profitable, as well as cost accounting will not disclose activities, department, product, and territories which bring profit and those that result in loss because profitable product cannot be disclosed. The company which does not apply cost accounting, it could not improve the net margin in the company because cost accounting can be most beneficial as a tool for management in budgeting and in setting up cost control program, which can improve net margin for the company in the future. Lastly is number 5, enable to determine tax liability. If the company doesn't apply cost accounting, the company cannot identify nor the tax liability faced by the company. In financial accounting, it is necessary to know the tax liability incurred by a company to measure the company are going to accrue profit or loss.
My name is Muhammad Syafiq Najmi bin Saiful Rasli. My matric number is 10DPA3007331. Okay, next I will explain about 5 difference between cost accounting and financial accounting. The first point of difference is objective. The cost accounting objective is its main purpose is to ascertain the cost and control. Okay, while the financial accounting objective is to determine the volume of earning and financial position. Okay, the second point of difference is scope. Based on cost accounting, the scope is still only with the cost and relate aspect. Okay, based on financial accounting, the scope it is deal with only the monetary transaction of the business. Okay, the third point of difference is utilization of data. The utilization of data in cost accounting is it use only quantitative information pertaining to the transaction. Beside that, utilization of data in financial accounting is it use only the financial transaction alone. Okay, the next point of difference is utility. The utility in cost accounting is it ends only at the presentation of information. Beside that, utility in financial accounting is it reveal the capacity and status on the firm. The last point of difference is nature. Based on cost accounting, the point of nature is its deal with the past and present data. While based on financial accounting, the point of nature is its deal only the past of the firm.
Okay, then next I will explain about cost that we use. Okay, first is a cost unit. Cost unit is generally a unit cost present the total expense involved in creating one unit of product or service. For example, the cost per unit for production of a school uniform. The cost per unit for the school uniform is RM30 ringgit for one pieces. School sportswear about RM28 ringgit for one pieces. Shoes about RM40 ringgit for one pair of shoes. And then school trousers about 25 ringgit. Track shoe about 25 ringgit, and the other accessories.
Okay, next is cost center. Cost center is a department or a distinct unit or division which indirectly contribute to the organization profit. This department may not indulge in production activity, so they may not generate revenue. Okay, based on the cycle, it shows types and example of cost center. It shows 6 type of cost center, which is personal cost center that deal with a person or group of person. Next is impersonal cost center deal with equipment, machinery and location. Next is production cost center are directly related to the production department. Next is service cost center are those which service to the production center. Next is operation cost center concerned with people or machine in activities. Last is process. Process cost center is concerned with a specific process or event.
The next is the cost object, which is any item for which costs are being separately measured. This is a key concept used in managing the cost of a business. And then it may be necessary to have a cost object in order to derive pricing from a baseline cost to see if a costs are reasonable, or to derive a full cost of a relationship with another entity.
Opportunity cost is referred to the value of what you have to give up in order to choose something else. It is all about the most basic of economic concept, trade-off. Opportunity cost is a notion inherent in almost every decision of daily life and of investing. We use opportunity where we have to make a choice for two items we recommend to buy and we can only choose one of them. We choose some things from the value of the goods we wanted that could benefit our company, and at the same time we had to give up the value of our second goods. For example, we want to buy a sewing machines that costs 1,600 ringgit and shift printing machine that costs 1,800 ringgit. The capital of our profit that we recommend to buy equipment is only 1,700 ringgit. Therefore, we have chosen to buy a sewing machine that costs 1,600, and the opportunity for Sahim clothing is a shirt printer that costs 1,800 ringgit. Replacement cost is amount of money required to replace an existing asset with an equally value or similar asset at the current market price. In other words, it is the cost of purchasing a competitive asset, the current asset being used by a company. For example, our company bought the machine for 1,000 ringgit for 3 years ago, and the value of the asset today, less depreciation is 200 ringgit. So the book value of the asset is 200 ringgit. However, the cost to convert the machine at the current market price may 1,500 ringgit.
Next is sunk cost. Sunk cost is a cost that has already been spent but not recoverable in any case. And future business decision should not be affected by past spend. Spending on researching equipment or machinery, buying, rent, payroll, marketing, or advertising expenses in the main example of sunk cost. For example, an XYZ company is involved in the manufacture of school uniform. They produce all kind of clothes. They initially spend 100,000 to buy equipment and machinery for their manufacturing plant. Over time, due to fashion change, company needs more advanced type of machinery, and the board decided to replace the old machinery with new one. The company has sold the old machinery at 20,000 as scrap, and the remaining 80,000 become a sinking cost. In the case, they should not consider the amount spent on oil machinery for any kind of future decision.
Okay, and then lastly, for the conclusion, the cost accounting is a system of recording and analyzing the cost of product or service in order to contribute towards strategic planning and improve cost efficiency. It is important for many parties involved in a business, including management, employees, and consumers. That's all. Thank you.